Hello traders, today is the 24th of January 2013 and the time in London is midnight 43, in New York 7:43 p.m. Happy trading to you all. The title of this video is Advanced Trading Tips. In this video, we will discuss how we can use the first Elliott wave, to forecast the motive wave. The wave principle is a fractal principle. We can perfectly use, the first wave, to forecast, the motive wave. The motive wave is the first wave, second wave, third wave, fourth wave, and the fifth wave. This is a motive wave because we know that the Elliott wave cycle is formed of 8 waves. First wave, second wave, third wave, fourth wave, fifth wave, A, B, C. That's 8 waves in total. The motive wave is the first wave, second wave, third wave, fourth wave, and the fifth wave. When we have the first wave, we can use the first wave to forecast, the motive wave. The Elliott wave cycle is formed of the motive wave and the corrective phase. Alright, so the motive wave is the trending phase, and the ABC is the corrective phase. We want to understand clearly what is the Elliott wave cycle. Motive wave plus motive waves plus corrective phase, that's the Elliott wave cycle. When we know what is happening, when we can understand the internal waves of the first wave, we can forecast the motive waves. Alright, so do not worry if you think these are difficult words for you. Do not worry about it. I will show you here on this chart. We are looking at the USD yen because I believe that if you want to trade, like a professional trader, you must understand, the Elliott wave principle and also the Fibonacci, principle. Very important. So if you're a new trader and you have been playing with the indicator, that's perfectly okay. But there will be a time where you will, sit down and decide to learn to master the wave principle. All right. So in the previous video, if you have been following us on this channel, you should know that, I have been talking about the crazy currency pair because I want traders to focus on this currency pair because there is a cycle that is about to begin and we want to take part into it, all right? So I will be talking more about the crazy currency pair, the dollar yen. The strategy that we're going to discuss before you switch off and watch another video, I invite you to stay with us. The strategy that I'm going to discuss in the video is advanced trading tips. So if you are trading stock, crude oil, gold, or commodity oil futures, you can still apply these advanced trading tips, to make excellent trading decisions. What is important for me, myself, to spend this time doing this type of video, I'm concentrating, on developing, the best trading character. So a trader may have a losing trade, a trader may be upset, a trader may get through some difficult time, but all these events are forming the character of the trader. It's very, very important, and I will not stop a trader to go through the losing period, to go through the emotional period, to develop a strong foundation, where they will be able to start making excellent decisions. All right. So here, what we are doing here, this is about This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. We are looking at the crazy currency pair. As I explained to traders before, when you check on the internet, when you look at a lot of video on YouTube, you will see that a lot of my fellow traders are saying, are thinking that this is the third Elliott wave. I disagree. It's perfectly okay. I'm not saying that I'm right or they are wrong. I disagree with my fellow traders that think that this movement from here to this level is the third Elliott wave. I disagree. Let me explain myself to you, all right? Very often I say to traders that the first Elliott wave must be dynamic, should break resistance on the left-hand side. Also should be the one breaking above, okay, the bearish channel. So if you take it that way, you will say, all right, this is the first wave. All right, from here to this level here, you will say this is the first wave, but I disagree. All right, all right, I disagree completely that this is the first wave in this case, and I will demonstrate that to you, okay, in this video. This is not, okay, the first wave, because many of my Elliott wave practitioners, okay, my colleagues, thinks that this is the from here to here, this is the first wave, and from here to here, that's the second wave, and from here to here, this is the third Elliott wave. I disagree. We haven't seen, okay, much about this crazy currency pair. It just came out of, okay, the bearish channel, and already people are saying that this is the third Elliott wave. It is not. Maybe, all right, maybe it's the first subwave of the third wave. Maybe it's this movement from here to here. Maybe it's the first subwave of the bigger third wave. We will see. But at this point in time, we can perfectly disagree because we are following the price. But why I disagree? Let me show you. Whenever you count a wave on one time frame, you must check either another lower time frame or a higher time frame to verify whether thing stands. You understand? If you check, for instance, we are on a daily chart now. We are on a weekly chart now. Okay, this is on the weekly chart. Okay, you see it all. The price run from here all the way up here. You see one movement up here. All right, that's the movement. If you go to the daily charts where I count my wave, you see that what I was saying to traders, I say from here to here, that's the first Elliott wave for the crazy currency pair. All right, then we have A, B, C. That's the second Elliott wave, okay, for the crazy currency pair. From here to here, that's the third Elliott wave for the crazy currency pair on a daily chart. And then we have A, B, C, D, E. That's the fourth complex Elliott wave on the daily chart for the crazy currency pair. And from here up to this level here, that's the fifth Elliott wave for the crazy currency pair. I have also said to traders that this movement from here, where I'm drawing a line to the top here, which I'm going to color now into red, that's the first Elliott wave. But in fact, what has happened, ladies and gentlemen, do not get confused. Though we have counted 5 waves already, these 5 waves, okay, formed the first Elliott wave. This first Elliott wave is a complex Elliott wave which has been divided into 5 sub-waves. You understand? So from here to here, that's the first sub-wave of the first wave. From here, 1, A, B, C, that's the second sub-wave of the first wave. From here to here, that's the third subwave of the first wave. Then we have A, B, C, D, E, that's the fourth subwave of the first wave. Then we have from here to here the fifth wave, the fifth subwave of the first wave. Now you will see that the third wave is longer than the first wave, and it is not the shortest. That's one of the conditions for the Elliott wave theory. The third wave shouldn't be the shortest wave. All right? If the first wave and the third wave are not extended, there is a high chance that the fifth wave will be extended. This was what has happened here. If you look at the fifth wave, it's a bit messy. I don't know what to tell you in this point in time. A bit messy up to this level. I believe there is a kind of distortion in this zone. As you can see, the 3 tops here on the daily chart. But if we go to the weekly chart, this is what I'm talking about. You count the wave on one time frame. Look on the weekly chart. All right, pay attention. The language of the price in the downtrend, The price must display lower lows and lower high. Yes or no? That's the downtrend. All right? The price must display lower lows, lower high. We don't want to violate that principle. Otherwise, it's something else. Do not fool yourself. In the downtrend, in the bearish channel, the price must display lower lows, lower high. What is the last low on this chart? Check it. Look at this chart from here down to this level here. Which one is the last low? It's not this one. It's not this one. It's here. So the last low in this bearish channel is this one. So, you understand? So we will count the first wave from the first high low. So as we see the price come out of this channel here, we will say to ourselves, give us the first high low. Yes or no? So I count my first wave from here, not here in this case. You understand? Because the low, the first high low is this one. The bearish momentum is diminishing from this point, not here. You understand? So we can see that how many years, okay, from 2009, even from 2008, this has been bearish. You can call this the third wave. It's maybe the first subwave of the third wave, all right? So you understand why I count this from here all the way here on the weekly chart. That's the first wave, not the third wave. We will see whether I'm wrong. If I'm wrong, I will let you know in the future that, sorry guys, I've been wrong. But this is my count, as I always say. But the most important thing, even if you are wrong, you want to make sure that your decision were right. The direction is the most important thing. All right, the direction. They are saying it's the third wave. I'm saying it's the first wave. Both of us, we were right for the same direction. Okay, no bad. But I'm saying to you, this is the first wave from here to here, and it has been divided on the daily chart into 5 subwaves. So the first wave that we are seeing now on the weekly chart is a complex first wave which has been divided into 5 subwaves. Moving on to the core of this video, we want to use the first wave which we have seen, okay, the first wave on the weekly chart, this one, okay. We're going to look at the internal wave of the first wave. The internal waves are the subwave, the small waves that form the bigger wave. From here to this level here, we have one wave. This wave has been divided into 5 subwaves. The subwaves are what we call the internal wave because they are within the bigger wave, which is from here to here. This is the bigger wave. Within this bigger wave, we have small waves. These subwaves, that's what we call internal waves. So with the internal waves of the first wave, we can forecast the motive wave, which I explained to you at the beginning of this video. Pay attention carefully, okay? Pay attention carefully. So we know now the internal waves of this first wave. With that information, we understand what is a fractal pattern. If you have been following us on George Trio channel, you will understand what is a fractal pattern. It's a pattern that can copy itself and paste it itself on another time frame. A pattern that is duplicating itself on many time frames. All right. So we see the internal patterns, internal waves of this wave. So if you want to see the internal wave of a wave on another time frame, you can go to the lower time frame. Then you can see. It's like when we are talking about internal wave, it's like we are using microscope to see inside the cell, so to speak, of the wave. So like this now you can see the internal wave. So if we go to the lower time frame, in this case I'm going to the daily chart, which is a lower time frame, we can see the internal wave of this red wave. You see the red wave is the bigger wave. This red wave has a small waves. First small wave from here to this level here. Second small wave from here to this level here. You can see that the second small wave has been divided into A, B, C. And the third small wave from here to this level here. I'm speaking like this. So to make it simple for you, so you don't think that the wave principle is a complicated matter, it's not. It's not. All right. Then the third small wave. Then we have A, B, C, D, E, This is the fourth wave from here to this level. That fourth small wave has been divided into another, okay, in a five, okay, small waves, which is a corrective wave. And then from here to this level here, that's the fifth wave. Sometimes let me look at this fifth wave. It has been extended because neither the first wave and the third wave are extended. There's a high chance that the fifth wave will be extended. Also, when we see the A, B, C, D, E in the fourth wave, there's a high chance that the following wave will be extended. These are other issues. But as I explained to you, these are the internal waves of the first wave that we have seen on the weekly chart. With this, okay, internal wave, we can forecast what the crazy currency pair is likely to do in the future. Hold it there, ladies and gentlemen. When we are talking about forecasting, it doesn't mean that, yes, now we know what the price will do, and the price will definitely do it. It doesn't work like that. The news, the fundamentals, and the market can change the dynamics of the market at any point. We know some traders are, if you are a new trader, you may be thinking that that's it, that's the holy grail. It does not exist. This is a technical analysis. We will, okay, do the forecast today, but we will wait. If we see the price, okay, doing exactly what we are expecting, we will take advantage of it. But we cannot force our expectation on the market, you understand? So don't go around and think that he will definitely do like this. This is what George has said. That's completely wrong. That's not the right way forward. I am a conservative trader, and I take, okay, a trade that offer me the lowest risk. That's what we are doing. So do not get too excited, though it's a bit exciting, but do not get too excited about it. You understand? Try to be like a mature trader. Don't be excited like a child. Be excited like an adult person, which means you put it into your mind, and if you see the price repeating these patterns, you will take advantage of it. Okay, let's move on. All right. I'm speaking like this because I know some traders are very new. So if you are more experienced trader, forgive me for speaking like this. All right, let's move on. So the first wave or the first subwave is this one here. All right. Then we have the second wave. It has been divided into the second subwave is this one here. We want to know the retracement of, okay, the second wave. How much profit those who bought it here up to this level here, how much profit they took in this second wave. We will use the Fibonacci retracement, okay, to measure how much retracement, how much profit people have taken after the price moved from here to here. How far the price went down. I'm speaking like this for new traders, all right? So we're using our Fibonacci tool. You can go to www.dayprotrader.com to learn to master the Fibonacci tool. Using my Fibonacci tool, I can see that they took 50% profit. With that information, the second subwave is a 50% retracement of the first subwave. There is a high chance, repeat, there is a high chance with this information that the second subwave has retraced 50% of the first subwave. There is a high chance that the second wave of the bigger wave, the second wave of this bigger wave has a high chance to come down to the 50% of this first wave. You understand? If you have any question or comment, put it below, or ask your question below the video and I can clarify it to you, all right? So, you understand? It's a fractal pattern, all right? So, there's a high chance that the second wave of the bigger first wave, you understand, the bigger first wave is from here to this level. That's the bigger first wave. Because the internal second wave has retraced 50% of the internal first wave, there is a high chance that The second wave of the bigger first wave will retrace also 50%. It will try to do exactly like this one. But this is not a certainty, this is not guarantee. But there is a high chance that may happen. Alright? If it's happening, we will take advantage of it. If it doesn't happen, we will not trade it. You understand? So don't force it. So there's a high chance that we will see something like this. The crazy currency pair coming down a bit like this. We are not saying that it will do exactly that, or maybe even go above it again. I'll leave it here, I doubt it. And then come down to this level. Alright, you see? So because you see it went like this, 1, 2, 3, there's a high chance that you see the movement from here to this level. That the second wave or this bigger move maybe also something like this. You see? So we are expecting it. Because it also went down 50%, there's a high chance that the crazy currency pair may pull it back down to this level, around the 8400. That remain to be seen. It's not guaranteed, it's not certain. But when we see it happening, we will take advantage of it. Very often, traders will look at the market forecast and they will place a trade and lose. And they will dump the forecast. But sometimes you will see the price will do exactly as the forecast, okay, has predicted. Alright? Because we are dealing with human beings, we are using the trading triangle. The market, the news, and the fundamentals can change the dynamics of the market at any point. If, for instance, the Japanese government tomorrow decided, okay, to sell more yen, this crazy currency pair will run up. So don't be surprised, okay? Alright? So don't say, oh, that's completely nonsense. Alright? The news can change it, okay? Go up big time. If it's going up, buy it, okay? Alright? Okay, so there's a high chance that it may do exactly like this because the internal wave also did something like this. It went down 50%, internal wave went down 50% of this one. It's a high chance that we may see the crazy currency pair bringing it down near the 8400. We will see. If it's happening, we will take advantage of it. If, for instance, the crazy currency pair, as I said, manages to come to 8400, at this point in time, we will be looking for buy signal here because we will expect the third Elliott wave to start from this point. You understand? It's a market focus. Next step, I will remove some line on my chart so I don't have too much mess. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. TST trading tool are simple trading tool. And the way we work, we prefer traders sending us a chart and working together with us. If you purchase the TSTW24 or SY008 and you want to work on your own, you have wasted your money. Alright? So now, right here, so we will expect at this point in time, okay, the third Elliott wave, okay, to start from here. Okay? We can also forecast how far the third Elliott wave will go by checking what has happened already here, step by step. So we can see that the third Elliott wave, when the third internal wave went up from here to here. Alright, we can calculate what has happened by using what we call Fibonacci extension. By the way, for traders that are using TC2000, if you want to use the extension, because normally when we are doing the retracement, the price move from here to here for this software. If we are doing the retracement, we will start from here and bring it here. But if you want to see the extension, because the price move from here to here, if you want to see the extension, we'll do the opposite. We'll start from here and bring it down here. This is for the TC2000. So I have now my extension already on the chart, and we can see the 161% projection. you need to go to www.dayprotrader.com. If you do not understand Fibonacci projection, it's here 161% is somewhere here, but it's what we call advanced. Okay, that's why I say advanced trading tips. Okay, so I'll call this zone. Okay, hold on, please. I want to do something here. 1 second, please. 1 second, please. One second, please. Yes, all right. Okay, so I will call this zone around 176%, roughly 176% projection, okay, of the first wave, okay, 176% projection of the first internal wave, because these are internal waves. So the third internal wave is the 176% projection of the first internal wave. With that information, let's move on, because I don't want the video to be too long. You can replay the video to see. If you have any question, put comment below and I will get back to you, okay? That's what we will do. So with that information, it went to 176% roughly, okay? Roughly. As the price, okay, is moving from here to give us the third Elliott wave, all right, we will do also the 176% projection, okay, of this move from here to this level. All right, on this chart, I can't see where is my 176% projection. I will go, for instance, to the weekly chart. Hopefully you see them. I couldn't see either here. That's it. It's here. Somewhere 176. Yeah, somewhere up here in this zone. Okay. So we will expect the third Elliott wave. Okay, for the crazy currency pair to bring it somewhere in this zone. Call it. Yeah, call it 9900 zone. 9900 zone. All right, somewhere up here. Okay, somewhere in this zone here. Okay, call it 9900. Okay, so we will expect. So far, what I've said is that go back again to the weekly chart. This is advanced trading tips, so don't be surprised that it's a bit okay, difficult for some traders. It's normal. We expect that if in normal condition, we are not saying that it will definitely do that, but if the internal pattern, okay, is duplicated or replicated on the higher degree, okay, time frame, we will see the second Elliott wave will bring the crazy currency pair into the zone of 8400. You can note it down. It does not mean that we will definitely do that, but if it's happening, we'll take advantage of it. If it's not happening, all right. If it's going up instead, we'll take advantage of it either. But the point of the market forecast is like a trading plan, all right? If the music has changed, we must change our strategy, all right? If the price comes to 8400, we will see. This is just to estimate what is likely to take place, and if it's happening, we will take advantage of it. If the price comes to 8400 zone, all right, do not think that it must definitely come to 8400. It can stop at 85. All right, be very flexible. Be very, very flexible. All right, be very, very flexible. All right, this is not a science. If the price comes to the 8400 zone, all right, and the third Elliott wave, okay, is underway. Talking about whenever we're going to enter the third Elliott wave, we must check the fundamental. Without a strong fundamental, you won't have a proper third Elliott wave. I have also explained to you that we are using the internal waves, that we have seen on the daily chart to forecast the bigger third Elliott waves, because, okay, the third internal wave or the third subwave has been a projection of 176, roughly 176% projection of the first internal wave. There's a high chance, going to the monthly chart in this time, there's a high chance that the bigger, okay, the third wave on a higher degree, if it happens to start from the 8400 zone, has a high chance to go into the zone of okay, into the zone of okay, 9900. That remains to be seen. It's a greedy target zone somewhere here. In fact, what I will do, start coloring this, color in the pink. Okay, the pink one is the target zone for the third, okay, the bigger third wave. I will color this one, the 8400 zone, into blue. No, I will use blue. In this case, I will use yellow. Okay, that's the yellow line for the second Elliott wave to come to this zone. We will see whether it will happen or not. Now, I'm going back again to the daily chart. What I'm doing, in fact, it's like a cheating, because the internal wave can reveal to me what is likely to take place. It's not revealing to me what is, okay, what is going to happen, but what is likely to happen. All right? Probability, not certainty. All right? Probability. This is about trading. All right? It's never certainty, okay? It's always, okay, probability. Traders that always are confident or looking for something that is working all the time, 100%, does not exist. All right? Does not exist. All right? I would prefer to tell the traders right now what is the truth instead of lying to traders. In the future, as the trader mature, they will show me more respect. All right? So, the fourth wave is a very shallow fourth wave. All right, you see here, the fourth internal wave, or the fourth subwave of the bigger first wave. Okay, this one is a very shallow. You want to see how much retracement. Before that, I draw another line. I'll remove, okay, my okay, Fibonacci drawing. I want to see how much profit traders took. Okay, the price went up from here to here. I want to see how much profit they took in the fourth subwave. So in this case, I will use Fibonacci retracement to see how much retracement the fourth wave is. It's just a 23.6%, very shallow. Okay, retracement. They took only 23.6%. Okay, profit from here to here. Trader that bought it here to this level here, they only took 23.6% profit. All right, with that information, I can forecast. You understand? Follow me carefully. These are advanced trading tips. Follow me, okay? With that information, I'm going now. Follow me. Our projection for the third Elliott wave is somewhere here in the zone of 9900. We will see. We're expecting, okay, we're expecting, it's not going to be easy to draw in this session here, roughly. We're expecting the retracement of 23.6% for the fourth, which is the line here. I'm going to put another line there. This time I'll color into green. Pay attention carefully, because this is not easy for me to post this video. You can see that myself, I'm sweating here. All right. So we will expect, okay, this is the green line for the 23.6% retracement to form, okay, the fourth wave. So we will expect the fourth wave after the third wave here in this section here. I don't want to move that. I don't want to move that. I want it to be, and to give us something like this: 1, 2, 3, 4, 5, A, B, C, D, E. I'm going to squeeze them all here because I don't have enough room. If you follow me, 4, okay, and 5. You see now? So we will see. This is already the first wave from here to here. We are waiting for the second wave now, which we will expect to come to the 8400 zone. If it reaches the 8400 zone, and the fundamental are sound, and the market is bullish for this, the fundamental is bullish for this crazy currency pair, and the third wave is underway. The third wave has a high chance to reach the level of 9900. After the third wave is completed, the fourth wave is likely to be A, B, C, D, E. Does not have to, maybe, but there's a high chance that it can be a complex A, B, C, D, E. Retracement of 23.6% of the bigger third wave to this level, and then from this point, the fifth wave will be underway. We can also forecast how far the fifth wave can go by looking at the internal wave of, okay, the first wave. You see? From here to here. Alright? What I'm going to do, okay, quickly. Okay, I just verify something for myself very fast. So you see now? Alright? I can use again the Fibonacci retracement tool. The third area where you see here, it went up from here. I will cancel that. Okay. I want to see the extension. Okay. Okay. It's not going to be perfect, but I'm just going to make it like this. 261. I will call it the fifth wave to be 300% roughly in the zone of 314 projection of the third wave. 314 projection of the third wave, because this is 261%. I will call this zone 314% projection of this third wave. Okay, roughly. Now, if you are new trader, just take it all this in, digest them, okay, come back again, watch other video on YouTube, come back again, and it will be clear to you. So with that information, I can go again, because I don't have room on the monthly chart. I'll go to the quarterly chart to see whether I have more space. Yes, I have more space on the quarterly chart. I will use again my Fibonacci tools, and I'm going to do again a projection. I'm going to do it roughly. I'm not into making it perfect, because you see I can't see the rest of my projection here, because I can't see on the quarterly chart. I'll go to the yearly chart, and again I couldn't see. Okay, it's somewhere up here, far up here, somewhere up. So far I don't want to. We can see my projection is in the future far away, above 110 for the dollar yen. Going back again to the weekly chart, the most important in these advanced trading tips, we can see on this weekly chart that this is the first wave, though some of my colleagues are saying that this is the third wave. I disagree. This is the first wave. From here to this level here, it's the first wave, which has been divided into 5 subwaves. Whenever we see, okay, a wave on a higher time frame, okay, and that wave has been divided into subwaves, with the information concerning the internal wave, we can forecast, okay, the motive wave. All right, so here we have the first wave, And we can also look at the internal waves of this first wave. The structure of the internal wave will allow us to forecast the motive wave. Let me put this to you again. The structure of the internal waves of the first wave allows traders to forecast the motive wave. Is that clear enough? The subwaves of the first wave, the structure of the subwaves of the first waves allow traders to forecast, okay, the structure of the motive wave. I will say this again. Let's move on. For instance, you see here, the price move from here. Let's spend time on this because it's very important. You may think some traders are advanced, they understand this. Once I've said it, they understand it. So don't think that I'm just repeating myself. No, I'm doing it on purpose because I know some traders need this. Okay, that's why I'm spending time on this to put it to traders in a different way so they can get the message. Because I don't want traders to misunderstand me. I want them to understand exactly what I'm trying to communicate to them. And myself, I've been very patient here, all right? So I'm not enjoying myself, repeating myself. But I think it's very important that I'm repeating myself because this is a very important subject, okay? The price, you can see here we are. Let's go back again on the weekly chart. The market pattern, the price was in the bearish channel, okay? And the first high low was given to us here. Some traders think that this is the first wave. In this case, I disagree. I disagree that this is the first wave. This from here to here, this is the first wave. Okay, this first wave has been divided into 5 waves, as we have seen on the daily chart. We are on the weekly chart. This is the first wave on the weekly chart. Because the weekly chart is a higher time frame compared to the daily chart, we can see the internal or the subwaves of this first wave on the daily chart, which means we are zooming into this first wave on a smaller time frame. The internal waves of the first wave on the weekly chart, here they are. The first internal wave, I will color it into blue. That's the first internal wave. The second internal wave is from here to here. But that second internal wave has been divided into A, B, C. I'll leave it white like this. The third internal wave is this one. I'll color in turquoise. From here to here, that's the third internal wave. The fourth internal wave is A, B, C, D, E. You may disagree and say, George, that's completely nonsense. I will say to you, this is my count. Leave me alone. All right. You understand what I'm saying, all right? So, okay, so right here, okay, this is the fourth internal wave, which has been divided into A, B, C, D, E. The fifth internal wave is from here to here. If you look at it like this, it looks messy, okay? It looks really messy. But from here to here, that's the fifth internal wave. But from this point, the bigger point here, to this point, that's the first wave on the weekly chart. When we see the first wave, repeat, when we see the first wave on a higher time frame, all right, when we see the first wave on a higher time frame, we go to a lower time frame, okay, to zoom into that first wave. If we can see the internal waves on that first wave, like here, you can see now. We can see them now. But if we go to the weekly chart, we can't see them. Just looking at this, you can't see them. Okay? But we go to another lower time frame. In this case, I'm using daily chart. We can see them. You see the structure of these internal wave. We can use them to forecast the motive wave. All right. You may say to yourself, what do you mean by motive wave? You know what I said? There is a video on our channel. We talk about the Elliott wave cycle. The Elliott wave cycle is formed of the motive wave and the corrective phase. The motive wave is 1, 2, 3, 4, 5, okay? Wave, impulsive wave. And then we have A, B, C. All right? So I can say, for instance, from here to here, all right, is the motive wave on a weekly chart. I mean, you understand, for the first wave. Now, I don't want to confuse you. For one cycle, the trending phase, if you can watch the video, what is the Elliott wave cycle, or how to recognize Elliott wave cycle on this channel. So, the trending phase and the corrective phase, this is the Elliott wave cycle altogether. Trending phase plus corrective phase, that's the Elliott wave cycle. The trending phase, that's what we call the motive wave, okay? So with the internal structure, okay, with the structure of the internal waves of the first wave, we can forecast the motive wave. So because this, we know now the structure of the internal waves of the first wave on the weekly chart, we can forecast the motive wave on this weekly chart. This is what I've done today. Because the internal wave on the daily chart, because this is advanced trading tips, as you can see, do not worry, take it step by step. We know that the second internal wave pulled back 50%. With that information, I managed, okay, to forecast the bigger second wave, bringing me to 8400 zone. But I also explained to you that this is not a science, this is not a certainty. By just gambling and selling anyhow, that's just a madness. All right? You will take a valid sell signal if you receive it. So if you're about to sell, please draw a horizontal line to know whether the signal has failed or not. So if the price goes above the resistance level, the bearish pressure is kaput. It's just simple. All right? Draw channels, draw trend lines. Don't just sell. It's your money, all right? So you want to make profit all the time, yes or no? So don't just gamble it, all right? We are not in the business of gambling, all right? So with that information, there's a high chance that the second bigger wave, all right? I hope I'm making myself clear here. Has a high chance to come to 8400. The same thing I did for the third wave. Let us say there's a high chance it may come in the zone of 9900. And the fourth wave, we also know that the fourth wave has a high chance to come back to the zone of 9600. All right, before the longest wave, which is the fifth wave, because we will expect the bigger fifth wave to be extended. Why? Because the internal fifth wave of the first wave has been extended. There is a high chance that the bigger fifth wave will be extended too. This is about a fractal, a pattern. A pattern that we have seen within this first wave is likely to copy itself, okay, and paste itself on a higher time frame. In this instance, the internal waves, we have seen them on the daily chart. They have a high chance, okay, to, you see this structure, up 1, 2, 3, up 1, 2, 3, 4, 5, up. You see, there's a high chance this structure up to this level may copy itself onto the weekly chart. You see, we see now on the daily chart, there's a high chance we see exactly this structure, all right, on the weekly chart, which means this structure has copied itself and will paste itself on the weekly chart. So we are likely to see the same structure on the weekly chart. Price will go up to this level, and then we see 1, 2, 3, and then boom, up, and then 1, 2, 3, 4, 5, and then boom, up, with the fifth one extended, as we have seen on the daily chart. Ladies and gentlemen, I would love to see your comment below this video, and also if you dislike this video, mark it down, okay? Mark it down so I know this for myself is important. Mark it down if you don't like it. Mark, okay? Mark it if you like it, okay? I would love to know why you think about this, okay, market forecast and also about these advanced trading tips. I will continue this series of videos about the crazy currency pair. Alright, and I will be teaching traders how to use, okay, the second Elliott wave to forecast the ABC corrective wave. In the next part of this video, when the second Elliott wave is completed for the crazy currency pair, unless I am wrong, because I believe this is the first wave. Some traders think that this is the third wave. I say this is the first wave. If we see the second wave, I can forecast, okay, the ABC corrective waves, which means I can forecast, okay, the corrective phase. To summarize, with the structure of the internal waves of the first wave, we can forecast the motive wave on a higher degree. With the internal waves of the second wave on a minor degree, we can forecast the corrective phase on a higher degree. I hope you have enjoyed this video, that you will put into use, okay, to make excellent trading decisions. We are the GSTW S008 traders. Thank you for watching, and we will speak to you very soon. Please make sure you rate this video and comment about this video. Speak to you soon.